Hey, welcome to Tech Tune Up with Paul Meeks, Holiday Edition. Today is December 18, 2024. I will not see you again before Christmas, so I wish you all the best. So let's get at it like a pack of wild dogs, like we always do. Have a lot of impactful news to share today. Let's start with some of the stock news, and not just specific to these names, but also how they may impact the tech sector and even US stocks and international stocks more broadly. So, first of all, I think we need to keep a close eye on the negotiations between Amazon and the Teamsters Union. A lot of folks don't realize that the largest private employers in these United States are Amazon and Walmart. And if we worry about wage pressure driving inflation, which has been a problem the last several years during the Biden administration, what happens at the end of this negotiation? Stay tuned. Next, if you can't beat them, join them. Here's a issue where it's hard for the Chinese to seek revenge on us for the export restrictions that we have put on them. And so they're going after the big boy in the space. It's, of course, Nvidia. And what they're now doing is opening the case, and I find this quite bizarre, of an acquisition of Mellanox that Nvidia made in 2019. At the time, folks thought that Nvidia, which spent $6.9 billion on what seemingly seemed to be this legacy, old school, no growth company, Mellanox, ended up being a deal that was very savvy because it provided networking gear to connect their GPUs in these AI data centers. So it was a home run, super savvy on Nvidia's part. But now, after all this time, the Chinese are delving into this. Very weird. Don't think anything will come of it, but it just goes to show you the heightened tensions between the US and China and how that's probably going to get worse under the new president. Uber might be a buying opportunity. This has been a stock that had been on my fresh money buy list. You'll see that in a couple of minutes. But it has been harpooned recently, as has been the shares of Lyft when it was announced by Google's Waymo that they're going to take their autonomous driving and robo-taxis from California and Texas, where they are being tested now, to Miami. I actually think what happens in the end, that this is not necessarily bad for Uber, because whether you are Tesla with your robo-taxi or whether you are Google's Waymo with their autonomous driving vehicle, if you have a fleet of said vehicles, you're going to need a way to organize and dispatch them. I think at the end of the day, these companies will be signing deals, at least with Uber, and maybe even with Lyft. And this could go from being a negative to a positive. In the meantime, I'm sticking with Uber. I hold it. I'm not fresh money buying it, but it's very interesting to me that the stock, based on this threat, which I don't think is a legitimate threat long-term, could set up a nice buying opportunity. I am prepared for that. When the stock settles, and I'll let you know here on the program, I might get after it again. I like the quarter that Hewlett-Packard Enterprises put up. Gives me some confidence in the continued success and really strong demand for AI servers that go in these data centers. That also should have a nice step through for that portion of the business at Dell. So I think it's kind of interesting. Stock was up 11% the day after that quarter was announced about a week ago. So it looks like the street like you very much. Next, DocuSign, which is kind of a blast from the past. Remember when DocuSign actually kicked ass several years ago? Had a pretty nice quarter. Makes me feel a little bit about better about their space going forward, because I hadn't really been interested in DocuSign for a couple of years. More problems with Google. Okay, we know that the Biden administration, and under the Biden administration, the Department of Justice and the Federal Trade Commission were after Google. We'll see what happens when Trump is inaugurated on January 20th. But in the meantime, as maybe a final gasp at regulation for the Biden administration, we have a suit, and now the suits have gone back in both directions, with the Consumer Financial Protection Bureau, the CFPB, that was created during the Obama regime, is interested in delving deeper and threatening Google's payment division. We'll see what happens. The other thing that's very interesting about Google, which is a positive, though I think in the near term it might be an over-exaggerated positive, is you probably saw the announcement a few days ago of their Willow chip, which is going to be used to lever quantum computing, which is the latest and greatest. And not only did Google go up a lot on that announcement, but a number of these publicly traded, almost forgotten companies in quantum computing have been on a flyer. This is what I think happens. This is totally overblown. Google has been talking about this since 2018, 2019. There are no commercial use cases, or very few commercial use cases, that would cause one to say the tide has turned with quantum computing. It is now going fast and furious mainstream. And some of these companies in its wake have been up 900% in 25. These are shorts, and I will short them when these stocks seem to find a peak, meet resistance on my technical analysis, which means they go up no more, even on good days in the market, and the volume dries up. Makes me feel that the buying has been exhausted. You guys, I'm looking for adequate use cases in AI. And now we're going to start pricing into stocks use cases in quantum computing that might come 5 years from now. It's a bunch of bullshit. This is going to be a really nice short opportunity. So next, Meta is joining the party. It's searching for nukes, that is nuclear partners, to power their AI data centers. And I have held almost all year long some of these nuclear-oriented utilities like Constellation Energy Group and Vistra. The other big one in the space is Talon, but I don't own those. But I'm holding the first two for the time being, not on my fresh money buy list, continue to hold them. They've been monster stocks this year. I do want to get a little clarity as what's going to happen with nuclear and all the other clean energy initiatives under Trump. And we will know more in about a month's time. So please wait. Next, this is very interesting. You know, one of my stalwarts in the portfolio, I'm in at 106 and the stock is trading at 110. So I haven't lost money on it, but I haven't made money on it like some of my big winners elsewhere. This is Micron. Micron is reporting its quarter tonight. I will be on that call live and I will report back to you. I think what happens is I don't see a risk at them missing the numbers or necessarily missing the street's guidance for the next quarter. However, it's going to be the tale of two cities. They will talk bullishly about high bandwidth memory, which is the memory chips required for AI computing. I think they're not going to have a good story to tell in their legacy memory chip business. And those chips go mostly into consumer electronics, things like smartphones and PCs. So at some point, I don't think it's going to be anytime soon, the stock will launch upwards once we get to the point where we have an inflection in their revenue mix in which high bandwidth memory and AI becomes more important than their, let's face it, crappy, maturing legacy business. Take a look at the results of Marvell about a week ago. This is an old school company that finally showed a quarter in which its AI semiconductor revenues eclipsed its legacy revenues. And look what has happened to that stock. It has exploded upwards. So same thing with Broadcom, ticker symbol AVGO. This will happen with Micron at some point once we get to that inflection point. Also reporting in the last couple of days and getting absolutely hammered on the news was Adobe. Adobe is one of the marquee US software companies. It was founded in the 1980s. It was one of the first to grab software as a service, and their CEO and management team are very, very well respected. The problem is, I think that they're being disintermediated by AI. All these legacy software companies, particularly those that serve the enterprise, we call them collectively ERP, enterprise resource planning software companies. They include Adobe, Oracle, ServiceNow, Workday, Salesforce.com. It is not clear to me as of yet that they're not going to be more disintermediated by AI than benefiting from it. And it looks like, particularly in Adobe's case, they are seeing a slowdown because they don't got the AI mojo, at least not yet. We'll see what happens. And now OpenAI, the owner of ChatGPT, has Sora, which is going to be a direct competitor in Adobe with video translation. We'll see what happens, but I'm not buying Adobe even after it got crushed on their bad quarter. And here comes Salesforce. Same thing goes here. Salesforce actually popped on their quarter, but they're only guiding to 8% revenue growth going forward. That's no great shakes. And they've announced that they're hiring 2,000 people to sell their AI products. Now, it's nice to have an AI product like Agentforce, which is their AI product suite, to sell. But one of the reasons that people turned against Salesforce a couple of years ago is some activist investors came in, attacked the company, and forced the company to discontinue its very aggressive mergers and acquisitions program, where they were buying companies at these dumb, egregious prices. And also, their operating expenses had gotten way out of control. And so they ended the M&A program. They fired a bunch of people, feel bad for them, but finally the company got its costs under control. And right when we start to have some confidence that they're actually going to generate profits, they turn around and say they're going to hire 2,000 people. Not a good idea, I don't think, because these are not low-paid people. These are people that are making 100 grand plus each. So anyway, I think it's a wrong turn for Salesforce. I think I might short this stock again when I see on the chart that it has peaked out. And this Agentforce product suite, which is supposed to have taken over the world, I'll believe it when I see it. Next, Synopsys reported their results. This had been on my buy list. However, the last time we met, I told you that I was putting it in the bullpen, waiting to see how this quarter turned out. And the quarter turned out poorly. So I'm telling you today, once we had that quarter about a week ago, I bailed on Synopsys. They are seeing disintermediation from new technologies. They are growing more slowly than they had in the past. And they also are being distracted, the management team that is, by a $35 billion acquisition of Ansys that's going to close probably sometime between now and next summer. I don't like that distraction, and that's going to be super distracting for the next 6 months. So I'm out. I don't let losses become bigger losses. I bail. Next, this is kind of interesting. In the pantheon of tech deals, I want you to know that not everything that Elon Musk turns to gold. When he bought Twitter in October of 2022 and rebranded it as X, I've recently seen a mark from some of the private investors in that deal that helped him fund that acquisition, which cost $44 billion. They are now marking down that enterprise in 2 quick years, 70% from where they bought it. I cannot think of a worse tech deal in the history of tech, but maybe when Time Warner very stupidly at the top of the bull market at maximum inflation of the internet bubble in 2000 bought America Online right before it was impaled. And so we'll see what happens with X. I tell you, it's not great, and down 70% in 2 years when the tech market has continued to rage over that period. Horrible, horrible deal making. So let's move to some of my tech picks, and some of these are fresh. All right, guys, yellow means they're in the bullpen. I still may own them, or I'm looking at them, but they're not fresh money buys. Green are my fresh money buys. The red stocks are stocks, like I just mentioned with Synopsys, that I have bailed on, sold out, maybe even taking a small loss before it becomes a big loss. But Micron, I mentioned, we're going to get a data point tonight, and it's going to be super important. The conference call is at 2:30 Mountain Time. I'm on it live. I'm very easily found. So if you want some commentary, just reach out to me. Microsoft and Meta, I'm waiting on. The only stock right now, even including Nvidia, that I will buy with fresh money capital for the Mag 7 is Amazon. Synopsys bailed. Nvidia is even a hold for me right now. The chart is looking a little creepy. And one of the reasons why is there is a growing view on Wall Street that, one, at some point there is going to be a digestion of all this GPU spending by the AI hyperscalers. And that might be a pause that refreshes, because I think the spending will continue again. And it might give you a chance to buy Nvidia lower. And you know what, you guys? It could go a lot lower. And if it does, I'm probably a better buyer. The other thing I worry about Nvidia is there's been a lot of talk from these hyperscale customers that they want to design their own chips. So Amazon is designing its own chip. Google is designing its own chip, and they are getting help from Marvell and Broadcom to do so. And so what I've done is I bought Marvell and Broadcom, which I've actually owned for a couple of years, as a hedge against Nvidia with their customers that want to do their own thing internally to save a few bucks. Dell, the chart looks shitty, but I do feel pretty good about AI servers based on Hewlett-Packard Enterprise's results. Still a fan of Taiwan Semiconductor, the world's most important semiconductor company with Nvidia, despite the geopolitical risk. And yes, the geopolitical risk has heightened between the United States, Taiwan, and the Chinese. Netflix and Google, I'm waiting to buy lower. Remember, do not buy Google on this willow chip quantum computing jazz. That is not going to be a financial needle mover for years. In the meantime, take the crappy, small, unprofitable quantum computing companies and short them. Arista Networks had a nice run in that stock, but as I've mentioned before, I sold it not so long ago, purely based on valuation. I've been looking at Sentinel-1. I keep waiting for it because it's coming down, down, down. I want to see the stock trough, but that is kind of my poor man's way to invest in cybersecurity software. Palo Alto Networks is the guy I have in that industry now. ASM Lithography, I bought at the bottom. There's not going to be a catalyst anytime soon because a huge portion of their revenues come from China. And of course, that's in jeopardy. But over time, we cannot build in this, not just the United States, but worldwide, advanced semiconductors without ASMLs, EUV, extreme ultraviolet technology. Here is something interesting. I am a tech analyst. I have been a tech analyst since the 1980s. But I have just bought some Citigroup. And I encourage you to do the same. I very much like Citigroup because I'm now more and more interested in buying financials. And this company is doing some good things. And the stock is still cheap relative to its comps. And then I mentioned the reason why I've added Marvell to my fresh money buy list. This is a company that's enabling some of the hyperscalers to get around Nvidia by designing their own chips. So there you have it. Those are my at least Christmas picks and pans. And let's go to finish up the show with some tech trends. And After we get through this in a couple of minutes, I hope you have a couple of questions for me because we're going to open the floor to your questions. The other thing I'd also ask you to consider, because I'm very easily found online or through Harvest Portfolio Management here in Charleston, South Carolina, where I manage tech portfolios, and my host, Benzinga, here on the YouTube channel. Reach out to somebody and tell us what you want to see from this program in 2025. I'm all ears. What do you want to see? How can we be better? So get your questions ready. Today is not just Micron's quarterly report, which I'm on pins and needles about, but also the Fed in a couple hours will announce their next rate cut. And going into today's meeting, it's almost 100% chance that they're going to lower by 25 basis points, but which is much more controversial and much more important. And we'll hear this from Chairman Powell from the podium at about 2 to 3 o'clock this afternoon, is what is the guidance for monetary policy for the next meeting, which is not until January 29th, which, with another interesting twist, is only about a week or so after we inaugurate our new president. Right now, Fed funds futures are telling us there is about an 80% chance that they will do nothing. So they lower by a quarter point today. Next meeting, January 29th, they hold off. And for those people that were hoping for a continued string of steady interest rate reductions, which is bullish for the market, they might be disappointed because inflation still is a little too sticky. And we still have a lot of ifs as to what's going to happen with fiscal and monetary policy once we have a new president on January 20th. It looks to me like the Fed might cool it for a while, because that's what 80% of Fed funds futures are telling us about their January 29th move. So don't be disappointed, because if folks are disappointed, this could jar the market, unfortunately. So stay tuned. I told you, following interest rates is not something that I relish. I'm not a macroeconomist, but it is important for the markets, and particularly for very aggressive growth stocks like tech names. Let the tech ass kissing begin. So Jeff Bezos and Mark Zuckerberg, who had been very critical of Donald Trump, Jeff Bezos at one time offered to take Donald Trump to space and shoot him up there and drop him off on one of his blue orbit satellites. They're now giving $1 million each for the inauguration party on January 20th. How the tide has turned. This is very interesting to me. We continue to see, and I mentioned this last time, some very big funding rounds from private tech companies. For example, probably one of the most important ones out there is a company called Databricks. They just valued in their most recent private round, in which they raised another $10 billion. They're valuing that company now at $62 billion, which is a private company. But as a public company at that valuation, it would be a monster-sized public company. And their last valuation round wasn't so long ago, and they're already up about 45% since then. So what happens here is we have some more marquee private funding rounds, but this is going to trigger some significant tech IPOs in 2025. We are going to open the tech IPO window that has been slammed shut since 2021. And as I told you in the past, one of the big ones to come first, in my view, is CoreWeave. I imagine that is a very hot IPO sometime between now and the end of second quarter of 2025. AI infrastructure, I'm sticking with it. Some people are moving on. Remember, I told you once we have this digestion period, which I do think is going to come for the spending on Nvidia's GPUs and some of the other AI infrastructure equipment, including building data centers, you will have a downdraft in these stocks. It's going to get some people thinking that the spending is over. We got to get out of Nvidia. I think it's going to cause a pretty significant, some point in 2025, drop in some of your favorite stocks. And you know what I do? Of course, I'll see what the news is at the time, right? I look at this stuff on a day-to-day basis. I might take that opportunity to buy more. to buy more because I think the AI infrastructure spending will then resume. I told you what I think about ERP software. I think all this talk about Salesforce.com and their Agentforce software suite and hiring 2,000 people to sell this software suite. I'll believe it when I see it. I haven't been on the ERP software bandwagon because, as we saw in some of their results recently, even including Salesforce.com slow growth, Oracle's slow growth, and Adobe's absolutely hideous quarter, that these companies are being disintermediated by AI. They aren't being helped by AI, no matter how much they say. So I still stay away from that entire group. Quantum computing. You guys, quantum computing got this mojo about a week or so ago when Google announced the Willow chip that enables quantum computing. Okay, I own Google. I don't own it for quantum computing. It's got a whole lot of other stuff I own it for. However, these specific, tiny, unprofitable, cash flow burning quantum computing companies have skyrocketed. There are 2, 3, 4, reach out to me and I'll show you the names that probably in the midst of all this crazy euphoria should be shorted as we go into 2025. One of the things that's a macro variable that bothers me a little bit is Wall Street's consensus estimate for the earnings growth of the S&P 500 in 2025 is 15%. And that's after earnings grew this year, kind of surprisingly for some, at about 9%. I think that 15% expectation is too high. And what happens when expectations get too high? Folks are disappointed and stocks get hit. Be wary that the estimate for the S&P 500 for 25 earnings is too high. And then the last thing, let me tell you here, is we're going to inaugurate a new president in a couple of weeks, right? Today's December 18th. Trump takes the chair on January 20th. The whole deal with this dude, as you know, and people seem to like it, is that he's mercurial. He's unpredictable. So we have a positioning very aggressively of what he said with his campaign rhetoric. We have some very aggressive choices for cabinet members, and most of them have to be confirmed by the U.S. Senate. So with all these cross currents, and some of these cross currents really hit our sector, you should probably not be aggressive buying tech almost no matter what happens until we get President Trump in office and we see what is real and what is smoke. Might as well wait, because there will probably be on day one a flurry of executive orders. And so maybe right away, some of this stuff is resolved. Some of this stuff needs to go through Congress, may not be resolved, but there's so many ifs. So I would probably wait to get aggressive, not just only investing in the tech sector, but investing in U.S. equities at all until the dude does his thing. Because we all know he could change his mind several times between now and then. I guess the last thing that just broke today, which I think is interesting in tech trends, is it looks like the U.S. Supreme Court is going to take up the decision on whether or not to shut down TikTok in these United States. This is interesting. This is maybe the ultimate test of the U.S. Constitution's freedom of speech in the First Amendment, because TikTok is not a small player. TikTok has 170 million Americans that are users. That's over half of the U.S. population. And TikTok was once a foe of Trump. Now TikTok seems to be a benefit of Trump's potential presidency. So Congress said that these guys were going to be shut down. I think it's January 19th. And so between now and then, the Supreme Court will hear this case, and it will be a landmark case testing the First Amendment freedom of speech. And then the last thing is everybody's circling around one Donald Trump, including the CEO of SoftBank, who just announced with Trump down in Mar-a-Lago that SoftBank, which is the big tech conglomerate in Japan, is going to spend $100 billion in the United States over the next 5 years on AI stuff. And in doing so, they're going to hire 100,000 people. Now, the first time Trump was president, the very same company said they were going to hire 50,000 Americans. Well, now they're doubling that. And I think during the first administration of Trump, they didn't hire that many folks. It was definitely less than the 50,000 person goal. We'll see what happens, but you can see that all the ass kissing domestically and even with the CEOs of foreign countries, they're all lining up to kiss Trump's ass. We'll see what happens. So now let's delve into a couple questions before we head out for Christmas. All right, Rich Wells says, and I'll read the piece. Please tell me your view of Nvidia joining the Dow last week and its volatility. It has helped to cause the Dow to do some things that has not since 1978. Does Nvidia belong in the Dow? Last question first. It definitely belongs in the Dow. And it was great to get Intel, which is a bag of shit company, out, and the largest market cap in these United States and the America's most important semiconductor company, Nvidia, in. Now, I tell you, if you are a tech investor like me, I poo-poo the Dow for a couple reasons. So first of all, the entire index is only 30 names, too concentrated. Second of all, I think the entire index has only 5 tech stocks, even including this switch. Also, not enough. And the tech stocks that they choose are the losers from yesteryear, like IBM is in there. Come on, man. In tech, got to show me the Google, the Amazon, the Alphabet, the Meta. Some of those stocks aren't even in there, and they're the world's most important companies. And so Nvidia will probably add some volatility because it is a high beta stock, but I would encourage you, don't even use the Dow Jones Industrial Average. Definitely don't invest in it in an ETF or anything. It's a bag of shit. But don't even use it for a marker to say how the market did today. I think you should use the S&P 500. S&P 500, more tech, 500 names, market cap weighted, not stupidly price weighted like the Dow. Much better index to follow, much better index to bet on. But at least they got the shitty semiconductor Intel out, and they got Nvidia in. So I do applaud, at least that one move. Is this the dip, Kramer said, in Nvidia that you discussed? Or do you expect more downward pricing pressure? I expect some more downward pricing pressure. In my portfolio, I have a 37% weighting in Nvidia. It is ridiculously high, but I've owned it for so many years. It has grown to that, but I haven't sold a share. I think what's going to rattle cages, as I said earlier on the show, is one, there's going to be some digestion in AI infrastructure spending. When that happens, people are going to freak out and they're going to smack Nvidia. At that point, I buy it. Also, there is this trend where the major AI hyperscalers, who are right now Nvidia's biggest customers, think Microsoft, Google, Amazon, Meta, they're all spending tens of billions of dollars on Nvidia's chips. They are starting to develop their own for the obvious reason, so they're not held hostage by Nvidia. And as that becomes more of a reality, and that leaks out in the financial press, that's going to be the second thing that's going to potentially attack Nvidia shares. So I will tell you what, I'm watching it super carefully. Reach out to me anytime. But I think Nvidia could go lower. And so I'm not buying it yet, even on this dip, because I think, unfortunately, it could dip even more in 25. Can you comment on SoundHound, the prospects for the future? SoundHound, as you may recall, on some earlier AI euphoria at the beginning of this year, I promoted on this program as a short, and then it went down a lot. And so that was a good call. I've been away from SoundHound now that SoundHound and some of these other plays, Big Bear AI, C3 AI, these companies are still, despite the AI mojo, losing money for the most part. So you know what? I got to take a look at those three names again, but I am a better seller and maybe even a short seller of those names on any continued boom in their prices. All right, guys, that's all we have time for. Again, reach out to me through Benzinga. I'm all over the place. Also through Harvest Portfolio Manager. And then also check out my show and subscribe to Wall Street Beats. It's a pretty good program. I trade on everybody's ideas on that program. There are some smart dudes there. In the meantime, I wish you very well. Give us some feedback on how we improve for 25. And I wish you and yours the best holiday season.